Hey guys, Saturday, June 14, 2025. I'm looking at live cattle, and I think there is a turning point. I traded this in the past and got stopped out. This is my second attempt to go short, and I'm going to show you why I think there's a turning point in very imminent, if not, it already started. So without any further delay, let's get into it. So I have data going back to the 1920s, and this is a weekly chart, and it's also live cattle cash. So it's different from futures. As you can see, we are at 233 as a high. So I'm using cash, the cash market, not the futures. So I don't have access to the futures market, which the high was around 226. So I'm using this to help me trade the live cattle futures. So let's get into it. I got Gann fan going all the way down to this low right here of 1933, and it's a scale chart. So I got the 45 here, and this is the 1x2, and right now we are bunting heads with the 1x2 on the live cattle. If I were to see what's the price on that angle right there, that will probably be like 221, and we went as high as 226. So that's my first evidence for high probability that there is a turning point coming in live cattle. The second thesis or theory that I have is that using these pivot high, these pivots here and here, you create a trend line or a channel, however you want to call it, and we're bunting heads right here again. That's my second one. My third one would be, I need to go back and use the advanced support resistance tool from the low that we made in 1933, February, to the last swing high, not the last one, but the one previous before we make this one. It gives me an extension or target of 228, and we went as high as 226 on the futures. So we're in this ballpark where if there's going to be a turning point, it's going to be somewhere around here. In regards to timing it, spectrum cycles doesn't work when you have a market that's trending like this, that it's just like on a you could say on a hunt or on a target to just go somewhere, and it's just going straight up, and for whatever the fundamentals are, that's what it is. But since I'm a technician and I do technical analysis, I'm looking for the possible greatest resistance for a high probability trade for a turn. And this market has been going up for 5 years. Gann says that sometimes after 5 years, things turn. And that's the only thing that I could look at in regards to timing. That 5 years up, and maybe we could probably sideways or consolidate or turn, and lining that theory with the technicals showing that maybe there could be a turning point here. So if you're risky and you're looking for an edge, live cattle is live cattle. It's probably a different market from like what I'm used to trading, but I like to research and see for a high probability trade. And I think maybe this one, I'm going to give it a second shot and see how it works out. And lastly, let's zoom in a little bit here. This is a technique called measured move. You can see that we have from 2010 to this high that was 59 months and 1,813 days. So if we get that measured move that we just created here and take that, let's see if I could get this right, and slide that over here. Look at that. Identical move from here to here. Same thing here to here. And it's all in this ballpark right here. And there's another technique that I noticed that kind of leads something for a turning point here, but that one's a little more esoteric. That one might spook the kids, so I won't include that on the video. It's a Gann technique, but just these things that I showed you on this chart brings me conviction that there could be a possible turning point, very imminent, if it's not already have started. So looking at possible targets using the advance and support, this could probably be a target, 186, even this pivot high here, or 172, but you're in this ballpark right here. This is like very extreme. I mean, you could measure other things from here to here. You get the midpoint, which I'll be showing you that on another chart. But this is an extreme one. I mean, if it gets all the way down here, you're short, you're going to be really happy. And also keep an eye on that pivot. So I think that's it for this chart. I'm going to go now to my other chart that I use for another other technical analysis, and I'm going to show you key levels and what the chart is telling me there. Okay, so this is my market profile, and this is the weekly chart. Now this is the futures, and you can see that the value area high here on this chart is 220, and you can see that the white candles trend is still up, but we do have a change of contract, and value area high 220. We are now around 212. Point of control within a 5-year time frame is 187. So high probability that it could get down there. I mean, it's going to take a while, but it could eventually get down there, as you can see, using this time frame. Now we go into the daily. Using 3 months, we went as high as 226. You can see this big gap here and change of contract. And now we are, value area high is 218. And mind you, that's where I'm short from, 218. My first short was 215, and that didn't work out. It exploded even higher and stopped me out. And then change of contract came, pushed. I got short in this area, and I was pushing here. So the point of control right now is 208. Using 3-month time frame, and value area low is 203. So I could probably wait for it to at least get 203 and lock in some profits, or maybe ride it down to 204. So these are, more closer targets that are, much more closer, that could find support and could find a turning point like here or here. Let's look at our simple glance chart. And so far, the monthly is still strong. The weekly, however, is building up a PPS sell signal. And the MACD already crossed over. But still strong. The trend is still up. So I'm just saying this is a very risky trade. But I wanted to give it a shot again and see what happens. We need to at least crack the 206, which is the 20 SMA. And get down at least to the 50, which is 194, or this area would be nice, or push lower, because I'm sure the bulls are going to show up in this area. Looking at the daily, you see that we already had a PPS sell signal on 610. We cracked the 20 and cracked the mobile. So we went as high as 226, kissed the linear regression channel, push sideways to lower, and now I'm sure bulls are going to show up once you get to this area right here, 211, even 210. So they're going to probably show up here, they're going to bounce it, and then the question is, once they buy it up again, and you keep an eye on this level right here, 218. So that's where I'm short. So if they bounce it and the bears defend 218, they'll push it and do another leg lower. So this is what I'm kind of seeing to see how it's going to play out. So I could probably be smart, and if it pushes lower in this area, lock in profits, wait for the bulls to show up, and see once they get to 218, see what happens. And if there's weakness around 218, pounce on it again, or go short and see maybe an A, B, C down into the cloud. So let's look at some retracement levels. From here, You can see that the 50% was 218. So this was a nice area to go short, push lower. So now let's see if it's going to push even lower. Let's assume maybe that it's not going to bounce. But if it is going to bounce, it's probably going to bounce from this low. As you can see, it's a good support. So I'm sure the bulls are going to show up in this area. And if they bounce, this is the area that if you haven't been short or want to get short, I suggest, or not trading advice, but keep an eye out for 218 because that's a strong level right there. And if it fails here, that's when you want to bounce here. And or if it fails 210, then it could free fall all the way down to this area right here, which is somewhere around 190. So let's get this retracement all the way down to this pivot low. You can see there's a 50%, so you want to keep an eye on that. That's 209. So it could fall here and then turn and try to battle the 218, which would be your 25% right there. And if this is not a good pivot to, then keep an eye out for 208, 209, 208. That's your midpoint right there. And 218 to 217 for a retrace. And if it fails, push lower. Now, if it goes higher than 218, high probability then that it's going to test 226. So it's 226, 218, and then like 207, 206, your midpoint, you know, depending where you want to anchor this pivot. 209, 208. Yep, that's your midpoint here, that area, 209, 208. And then obviously, if it's going to find support here, 210, 209, 208, 210, the bulls are probably going to show up because they're going to look at this area right here and they're going to be like, oh yeah, let's defend this and let's push it up and squeeze the bears. And then the bears are going to come in and defend the midpoint, 218. And if they can't defend that, then they're going to try to see if they could take it to 226 and retest it. And then if they take it up there and fail, then a couple of things. They could just consolidate here back and forth until it breaks above, or at one, the bulls are going to be like, yeah, we don't have any more strength to push this thing even higher, and then they're going to really pounce it, and then you're going to see it really sell off. So those are the kind of scenarios that I'm watching, and options and ideas to give you if you're trading live cattle. Let's look at our midpoint chart. So far, PPSL signal, waves are weak. You can see that it's very, very bullish, very overextended. I mean, this is a yearly chart, and you're already over the purple pivots on the highs. You can see that there is weakness coming in. It's coming in strong. And that was the weekly chart using the yearly pivot. This is the daily chart using monthly pivots, and you can see that change of contract. We gapped down, and we already cracked the midpoint of the monthly pivots, which is 213. And the mobiles are negative, and the waves are pushing down. Stokes are pushing down. So it's all a matter of it finding support, and I think it's going to find support somewhere around here and maybe bounce up. And lastly, looking at our 4 hour using our weekly, this is the line in the sand for this week coming up, 216. 216 and 218, you know, right, already 218. This is the area that the bulls are gonna try to penetrate. So this is gonna be where maybe it finds support, 208, 2010, and then push higher. And this is where the battle is gonna get fierce right here between the bulls and the bears. They're gonna defend this area, and the bulls will want to break through it. And we got to see who's going to win here. So in my case, maybe I might lock in profit around here if it gets down there, and then wait to see what happens between the bulls and the bears in this area. And like I said, if they push higher, then high probability they want to test 226 before, you know, they throw up their hands and be like, I'm done, and then let it tank. But everything is kind of lining up here with all the stuff that I showed you. As you can see, The waves are negative. Stokes are unwinding. And then last chart, and then we'll wrap this video, is my hourly. So this is for, you could say, trading for the US Monday. This is 214. This would be the line in the sand also, but this is just for Monday only. So from here, you can say bulls, and from here, bears. So we'll leave it at that. Hopefully you like this video, and I'll keep you posted on my thoughts on live cattle.